Hello guys, welcome to the Trading Parrot. This video is going to probably blow your mind. When it comes to Ethereum, this recent rally has very peculiar moves that we are seeing from the whales and from retail. I'm going to show you where we're getting overheated, and if we were to take a pullback in the middle of October, where is that place most likely going to hit? Because if it does, it will really hurt. Yes guys, this is an in-depth video and we'll look into liquidation levels, we'll do Ethereum against BTC ratios, we'll look into CryptoQuant news and everything, even comparing Ethereum against all the other coins. If you haven't noticed, you are in the best crypto YouTube channel across all the universe. And if you want to trade Ethereum on any altcoins, look no further than 2bit. 2bit was built by the same people from Bybit. 2 minutes to open the account, no KYC needed. They deposit to you $50 for free as soon as you sign up. Now, if you deposit your own cash, you can get up to 30,000 in rewards. Very easy to use, the interface, I love it. I use it myself. The link is in the description. Do not make the mistake of not using my link because you're gonna lose the rewards and all of those goodies. I am going to start with the weekly RSI on Ethereum. This is because pretty much everything I know of how Ethereum is behaving comes from this picture in front of the screen. We have a high of momentum this cycle of 84 with descending highs, bearish divergences. Eventually we bottom at 31 and we started a breakout. This was really promising, but it managed to hit the revenge rally already of 74. We did that when Ethereum hit 4.952. At that point, I was spending my holidays and spending 1% of the time only distributing Ethereum. I promise you, I didn't look at any chart. I was just checking my watch and seeing the price of Ethereum in a single screen, and whenever I hit $200 more, around the 4,000 to 4,900, I was distributing on that revenge rally. This revenge rally has pushed the momentum to the downside into the 59. And now we are in a second layer down of a revenge rally into 67. So we really need to look at that potential upside. So that currently is located at 4,869. That price is gonna be moving every day, every hour. I mean the target, because the target follows wherever the price is. If we go higher with the price, the target is going to come closer. And if we start dropping, the target will go higher. So if you really want to follow this without missing the price action, you can do it straight from your Telegram account. Just follow my Telegram account with the link in the description, and you're going to get access to all my charts live. Let's have a look at the short-term liquidation pools. At the 30-day, we have here one big liquidation, the largest one of the past 30 days, located at 4,426, followed by 4,236. We need to keep an eye on that when we look at the charts. Currently, support is at $4,000, and those two bigger liquidations are located in this vacuum in here. I will say if we really go for the 4.2, probably we're gonna go back below 4,000 because that is a big retracement in here and from a context of a rejection potential from the revenge rally. I still expect higher prices for Ethereum. I accumulated a tiny bit below $4,000. That was my plan even before hitting 4.9. But it left me scratching why we didn't go to the volume profile. There was the volume weighted moving average there. There was a lot of things going on, but we just bounced off 3.8. And if we have any chance to go to 3.5, it will be thanks to this revenge rally in here. Now there's obviously a point of invalidation if we go beyond 3.877 and we put a weekly close above that. We are signaling that the effect of the revenge rally is now fully cancelled. The bounce from 3.8 that happened recently was perfectly from an area of value. As you can see in here, the delta longs versus shorts shows you the areas where we have been with too little longs or with too many of them, or you can see it as a ratio longs versus short indeed. This particular chart actually will, to go to 3.5, it will require that the longs shorts ratio comes back and revisits 48 or slightly goes below the support. I am not expecting to go to the lower band, that will be a confirmation of bear market pretty much, but I'm expecting around this area. Pullbacks are for me a signal to look for longs. Currently Ethereum in this matrix is sitting around the lower right hand side square. You can see that pretty much is on the 4th or 5th place, right behind BTC that is at the highest. And I'm talking about the x-axis in terms of wealth versus retail. So at the moment, there is the most amount of wealth allocated into BTC. This is in USDT perps. So we are talking exclusively open interest. So that means that whales are at the moment in a position, and we saw that when we were looking at the brown whales in fire charts in my Bitcoin videos. But Ethereum is slightly behind that, but a lot more than the rest of the altcoins. Now, if we focus on the y-axis, you see the bid versus ask ratio, and Ethereum is at the lower end, together with BTC. There is a ton of support on all of these coins because they have a lot more orders from 0 to 5% deviation away from the price. And the ratio from being above ask liquidity or below bid is currently signaling that HBAR and Aptos have the most support. You can see Ethereum in here on the ratio 0 to 5 is currently in neutral. Probably that's why it's earning its position here at the lower end. When it comes to socials, Ethereum is pushing up, but from the very lows, so not very attractive at the moment in terms of social dominance. Being quiet is a good thing in my opinion. Against Bitcoin, we have had a lot of progress in here. Of course, from the lows of April, we have rallied all the way into the resistance of 004. That coincides with the resistance that we have in January 2021 before Ethereum started outperforming Bitcoin and going into 008, which is a 2x against whatever Bitcoin already did in 2021, which by that time it was a lot. Notice that once it manages to get in here, we are in May and Bitcoin will have corrected 55%, just saying. But Ethereum in here hit that resistance and it should be due for additional upside after this huge breakout from a trend line that starts from May 2021. So all the way from May 2021 into June 2025, that's 4 years of squeeze that blew in here. So I'm expecting to see some upside against Bitcoin. But remember, against Bitcoin, Bitcoin moves. So Bitcoin could do like in May, that it takes a dip and then Ethereum outperforms against Bitcoin. In terms of liquidations, we have some juicy liquidations on the upside. Nothing as big as what we used to have at 4K. After all, that was the alpha that Papi took profits. We focus on this on every single video for over a year, and we took profits all the way from over 4K into 4.9. Now Ethereum is threatening from this flag to continue the rally up, but there's way less liquidity, and that's okay, because during price exploration, we tend to rally not thanks to the motivation of liquidity pools, but thanks to other motivation. Call it the retail, the speculators, futures-driven, short-lived upside. And on the daily, currently, after we did all this way down into hitting 30, we are now putting a breakout on Ethereum. This is a breakout that breaks from the resistance from 22nd of July, and we are finally above that level. That calls for some upside into liquidity pools that are above the price. So let's focus on those. And they're currently located at 5K, the psychological level, 5.1, and then another peak at 5.567 below the price. Let's exclude all the upside, and we got a juicy one at 3K and a middle ground at 3.5. That 3.5 is the target if the weekly manages to win this argument and say nope, you're not gonna go beyond this revenge rally and you're gonna put a leg down. We put a leg down from the highs of 70, let's say into 50s, and we hit that 3.5K. The daily saying no, we have some additional upside, but careful, because that additional upside from the breakout on the daily could be only enough to achieve the 70. Okay, that could be the upside of the daily, and then you get the weekly to tell you no, FO. Here there is the pattern I'm as well looking at. We got a head and shoulders and a revenge into resistance. We really need to climb here and carry on and put a new high to convince me that from where we are, we can really go into 8K Ethereum. I think it's doable to go 5K, 5.1 and get into 70 RSI. At the moment, that resistance on a closing basis is 4.867. So intra-candle from almost 4.9, if you reach out intra-candle within a week, you can tap the liquidity that is sitting right above the price. Even the second one. I think for the third one, we need to invalidate the revenge rally of the weekly. Let's look at CryptoQuant. We look at these things from so many angles that this aggregated information is kicking the ass of every other single YouTube channel that talks about crypto, typically only for entertainment. So if you're here for alpha, if you're trading, if you're investor, scalper, swing trader, you won't find better than this. This is how good as it gets. CryptoQuant has big whale orders, and this belongs to Wells. So we already saw that on High Block Capital. That's a separate platform that is confirming that. But Wells on futures, sorry, this one is on spot. So on spot, we have also Wells being part of this rally. So we got futures on USDTM on Binance leaning towards Well relative to the rest of the coins. As we saw in here, Ethereum is above all of these that are to the left-hand side. On spot, we have big whales, but on futures, we are starting to have too many retail orders. This is against what this one is saying, and that could be potentially because of a lag in the data. So whether CryptoQuant or High Block Capital is tracking more whales on futures, eventually they should synchronize if they get an update, and we should be able to see if we are exposed to too many retail orders. With the spike of lunar crash that we were seeing in the chart, in here, I'm tempted to say that retail is buying into this move up. Let's have a quick look at the news on Ethereum to see where we are standing. What is retail consuming to enter into those positions? We have a 9 out of 10, very bullish, a 7 out of 10, and a 6 out of 10. That's moderate. Grayscale enables staking in US spot Ethereum ETFs. That's on 6th of October, first US spot crypto ETPs to add staking. ETFs holders can now earn staking yield inside a regulator wrapper, likely boosting institutional demand for Ethereum. Remember that when something is staked, it gets stuck there in the contract, in the blockchain. So that means less liquidity for Ethereum, and that means less downside, hopefully assuming that people are going to buy into this. But it's crazy. Now institutions can invest in Ethereum and can get it all staked behind an ETP. Ethereum spot ETFs see strong fresh inflows. We covered that in the Bitcoin video as well. Remember that the same for Bitcoin and Ethereum. When you are having massive inflows on spot ETFs, that has historically coincided with local tops within the bull market. Daily transactions break a 4-year range above 1617 million. I also seen a lot of USDT and USDC inflows into the Ethereum network, which means that people want to trade on a layer 1 or maybe on other layers, who knows, against other coins, and that's activity for the network, assuming that they do it in the Ethereum network, which is a bit more expensive, but not as expensive as it used to be. On-chain activity punching through a multi-year band signals expanding network usage and fee burn support constructive for Ethereum's demand and fundamentals. Let's do a quick wrap up because there was a lot to dig in this video. On the weekly, the likelihood is of a revenge rally of this RSI into a level of 70 that can push the price into 4,867 on a closing basis. Intra-candle, it could reach out with the hand these two levels of liquidity. The third one in here, I think to get us there, we need to step into the lowest likelihood, which is this RSI to go straight into 80s. That is just a matter of probabilities. There are no certainties. The way I am planning to trade that is if we get lucky and we get that revenge rally completed and we take this liquidity, I am hoping that that produces such a rejection that I can accumulate more Ethereum. Of course, many of you are going to think, yeah, but that's impossible. If we go to 3.5K, that's the end of the bull market. And I'm with you, but at those levels, if we get into 3.5K, even if it's low likely, but if we get there, we could rally this at risk-free very easily. I will expect from there some bounce. Once we get some bounce, I can put my break-even stop loss and I can let it ride. If we go back into 5K after that, that's amazing. And if we don't, I lock in some profit. So that's what I call risk-free. I hope you enjoyed the video and I'll see you in the next one. Bye-bye.